Markets digest U.S.-China trade truce. Asian markets gained Monday after the U.S. and China over the weekend agreed to a timeout in their tariff war and agreed to resume trade negotiations. Mainland Chinese shares soared on the day. The Shanghai Composite added 2.22% to about 3,044.90, while the Shenzhen Component soared 3.84% to 9,530.46. In Japan, the Nikkei 225 jumped 2.13% to close at 21,729.97, with shares of index heavyweight and robot maker Fanuc soaring about 3%. The Topix index also gained 2.17% to finish its trading day at 1,584.85. South Korea's Kospi closed fractionally lower at 2,129.74, as shares of industry heavyweight Samsung Electronics fell 0.85%. Australia's S&P ASX 200 rose 0.44% to finish its trading day at 6,648.1. Hong Kong's Hang Seng Index was closed on Monday for a holiday as protests rocked the city on the anniversary of its return to Chinese rule. European stocks traded higher on Monday after U.S. President Donald Trump and Chinese President Xi Jinping agreed to hold off on additional measures in a bid to reignite trade talks. The Pan-European Stock 600 closed 0.9% in afternoon trade, slightly cutting its early surge after weak Eurozone PMI data. Technology stocks led gains, up nearly 2%, having hit a one-year high earlier in the session. Food and beverages was the only sector trading in the red. On the data front, according to Market, German manufacturing PMI in June resulted at 45.0, its highest in 4 months, but below market expectations of 45.4. For the whole EU, the index printed 47.6, missing the market's expectations and at its lowest in 3 months. IHS Markit's June final U.S. Manufacturing Purchasing Managers Index was 47.6, below an earlier flash reading of 47.8, and May's 47.7, marking its 5th month below the 50 level, separating growth from contraction. An index measuring outpoint change, which feeds into a composite PMI due on Wednesday and is seen as a good gauge of economic health, spent its 5th month below the break-even mark, registering 48.5. It was 48.9 in May. Meanwhile, as the data showed on Friday, inflation in the Eurozone was stable at 1.2% in June, a long way from the 2% the ECB would like it near. U.S. stocks rallied to an all-time high after a trade truce with China, though finished well of highs of the day, as measures of manufacturing activity showed growth slowing in the world's largest economy. The S&P 500 ended at a record for the first time in 10 days, led by a surge in chip makers after President Donald Trump agreed to ease a ban on American companies supplying the Chinese tech giant Huawei. The Nasdaq 100 hit a 2-month high. Industrial shares were underperformed as a U.S. manufacturing gauge showed orders stalling last month. According to the U.S. manufacturing PMI report published by IHS Markit, the business activity in manufacturing sector in June expanded at a soft pace, with the headline PMI ticking up to 50.6 from 50.5 in May and coming in better than market expectations of 50.1. As for the currencies, the greenback came as the overall winner at the beginning of the week, ending the day with substantial gains at most of its major rivals in commodities. Oil prices jumped to their initially highest point in more than a month, pushed higher by an OPEC Plus deal and the ceasefire between Donald Trump and Xi Jinping. OPEC and other allied major oil producers have agreed to extend crude oil production cuts for another 9 months, in a move designed to keep oil prices from falling as U.S. production increases and concerns grow about global demand. Crude oil prices rose early, reports of OPEC's decision. However, prices were not able to rise dramatically, as countries that don't cooperate with OPEC, like the United States, have enough capacity to meet projected growth in demand. As a result, Brent slipped from highs around $66.70 to $64.20 and closed marginally above $65. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.